So let's get into the weekly review and a forecast for next week. Starting off, I didn't take any trades last week, so it's absolutely fine. No capital risked, no capital lost. There was no setups that I liked. I didn't take any trades. So just going to keep that simple. Also going to remove all these drawings off the charts. Same with the S&P if there is any on there, just in case. As you can see, this was the one that I lined up but didn't end up entering just because of the fact the higher time frame did not align, and I'm glad that was the case because we would have been stopped out there. So in terms of a weekly candle, let's see what we had. So I think 21st was the start of the week. Yeah, so let's go on to hourly. So we start here, this candle here. So we trade up a little bit, then come down into the AM session on Tuesday, create the weekly low after sweeping out this low here. We trade up, failed to sweep these highs. Actually, no, we just sweep these highs here. Then we have a retracement into this hourly order block for the expansion on Wednesday. And then Thursday was a bit more consolidation, traded up into the AM session on Friday. And then Friday was just a bit of consolidation with the final expansion, and then, just a bit of a consolidation at the end to create the top wick of the candle. And I imagine it would be similar sort of thing on S&P, maybe a bit more, slightly different, I'd imagine. So yeah, you can see it's a bit more unpredictable here. We traded down into this hourly fair value gap here. Massive expansion up on the Monday news driver, and then gradually throughout the PM session we get a move back down into this, and then we fill in this imbalance, push up, create these equal highs as a new target to take going into the rest of the week, and then trade down on the Tuesday AM session. So I think we had a similar move on NASDAQ, on the S&P, sorry, from memory that I just had a look at. So Tuesday was this driver here. So you can see it wasn't as big of a move as it was on the S&P, on the NASDAQ, sorry. And then gradually just filling in the imbalance, trade into this fair value, inverse fair value up here, push down, and then inverse that, trade down, expand up on Wednesday. So yeah, so coming out there, so coming into the AM session we traded down and then moved up during the PM session to then pretty much consolidate for the rest of the week, final push up. And yeah, so that was, we have plenty of red folder news. We have no news on Monday, and then red folder all through Tuesday, Wednesday, Thursday, Friday. Friday's a tiny bit less. Tuesday is FOMC, and we'll probably be staying out of the markets on Tuesday just because of the fact it is FOMC and low probability stuff, you know what I mean? But in terms of the market overall, you see we're still pushing all-time highs, still. So we're now up, how much are we up here? 22,240 to 22,295. So that's what, 55 pips up from all-time high, or 550, however you want to count it. Yeah, it's fine. And then the NASDAQ, the S&P, man, I'm getting these properly modeled up at the moment. From previous all-time high 6153 to 6391 all-time high. So the S&P has been moving quite considerably a lot higher than the NASDAQ, and I'd imagine that's purely because it's 500 top companies instead of 100, which makes a lot of sense. So yeah, overall, probably be looking to trade either tomorrow or potentially Wednesday. If we stay bullish, that would be nice, as you know, we can possibly expect a Wednesday expansion, so that would be my daily bias around then. But obviously we'll have to see how we go. In terms of the new weekly candle, I would anticipate that we make one more bullish week up. So bullish this week and then trade back down into this imbalance that gets created, hopefully. And yeah, so that I'm feeling bullish this week and then bearish going into the start of August, simply because that seems to be how candles work, mate. So if you think about it like this on a monthly basis, first week into June, so first week of July, a bit of a wick, create the body down. Second week, fill that back in. Third week, expansion, and then possibly one more push up here. So yeah, no bullish weeks for the last 1, 2, 3, 4, 5 weeks. Pretty big moves. I'm not really going to go too much more detail into it because I don't need to at the moment. We just have to wait and see what the market gives us, what we bring, what we get brought. And in terms of new previous daily high and low, we'd be looking at here on Friday to here on Friday, unless we've got this. Yeah, so this range here, how do I do it? Is it shift? No, it's not. It is. No, not that one. Okay, so I'm not sure what the button is to actually do it on here on my Mac. I know how to do it on the on a computer. This, I mean, that's just select. So anyway, before I get carried off on a tangent there, that's pretty much going to cover it for me at the moment. Have a look at gold. Gold has been trading down, as you can tell. Tends to do the opposite of the S&P, etc., simply because it's gold to US dollar. So if the market's trending up, then gold's going to go down. If gold's going up, then the market's going down. As you can see, in the last few weeks or a few months, we've sort of just been in the same sort of range. And yeah, don't really have any more to say, so that's going to do me for today. And yeah, we'll see how we go into next week.